If you told me 3 years ago that investors would be leaving Toronto and Vancouver for Edmonton, most people would have laughed. But after everything that happened in 2025, payment shock, stalled rents, tighter underwriting, that shift makes perfect sense. Because while the big markets were grinding to a halt, Alberta kept moving. Rents continued climbing, vacancy remained low, and CMHC-backed multifamily deals were still qualifying with strong DSCR. I'm Darren from DK Wealth and Growth, and today I'm breaking down why Alberta, and especially Edmonton, quietly became the smartest investor move heading into 2026. If you're new here, welcome, and if you've been following along, thank you for sticking with me every Thursday. Stay with me to the end. I'll show you how investors are scaling in Edmonton even when other markets are stalling out. Let's start with the obvious question. Why are investors pulling back from Toronto and Vancouver? 2025 told the whole story. Listings sat longer, rents moved lower, carrying costs jumped, especially after renewals hit everyone like a freight train. And lenders, they tightened everything. Debt ratios, rental add-backs, stress tests, all of it. So you had a strange situation where even high-earning investors struggled to qualify, and the properties they could qualify for didn't cash flow. That combination, weaker cash flow and harder lending, broke the old investment model in the big cities. Now here's the contrast. While Ontario and BC were slowing down, Alberta felt like it was running a completely different race. More people moved in, the cost of living stayed reasonable, no provincial sales tax, job numbers stayed resilient, and rental demand actually increased, especially in Edmonton. And because rents kept rising, DSCR stayed strong. That's the fuel CMHC needs to approve multifamily deals. So while other markets were seeing financing slow down, our Alberta projects kept getting green lights. It wasn't hype, the fundamentals genuinely worked better here. And if we narrow it down even further, Edmonton came out ahead. Here's why investors gravitated toward Edmonton specifically. Rent to price ratios actually make sense. Older homes dominate the market while tenants prefer newer units. Vacancy has stayed consistently low. Migration added steady renter demand. Friendlier zoning makes multifamily easier to build. And most importantly, properties qualify cleanly for CMHC. Edmonton gives you something the big cities haven't given investors in years: control, predictability, cash flow, and room to scale. It's not the sexy market, but it's the one that still works. Let me make this more real. Take a standard sixplex in Edmonton. Strong rents, simple operating costs, reliable tenant demand, and DSCR numbers that pass CMHC underwriting on the first go. That means leverage stays high, usually between 90 and 95%. Amortization is 50 years and rates are below prime. As an investor, that gives you two huge advantages. One, positive cash flow from day one. Two, the ability to refinance later based on the building's performance, not your personal income. That's the opposite of what we saw in Toronto in 2025, where cash flow shrank and refinancing became almost impossible. So what does this mean for 2026? It shows the market is finally rewarding fundamentals again. Not hype, not speculation, not a bet on future appreciation, but places where rent demand is real, where debt ratios hold, where CMHC underwriting stays consistent, and where you, the investor, have actual control over your asset. That's why so many investors shifted west last year, and why that trend is accelerating going into 2026. Edmonton isn't just affordable, it's scalable. And in this environment, those are the only two things that matter. If you want to see why our clients are focusing on Alberta and how CMHC-backed multifamily fits into a real scaling plan, click the link below and book a strategy call. I'll walk you through Edmonton's strongest rental pockets and show you how to build a portfolio that actually performs in 2026. I'm Darren from DK Wealth and Growth, and I'll see you next Thursday.